Well, good evening, everybody. It is Market Monday. Blair Nightingale here, joining you once again. We're here every single Monday. We had a lot of people on last Thursday. We are here, for those of you who don't know, Mondays and Thursdays. In fact, I've been mentioning over the last few weeks, starting 2021, that we are going to be doing more and more and more of these broadcasts through 21, not just with me, but if you stay tuned on the Facebook page, the YouTube page, you will be able to like on Facebook, subscribe on YouTube, ring the bell, and you will always get notifications when there is new Tradeway content, because 2021 is not only going to mean some new things are coming for you and I, but also some new things coming from some other coaches at Tradeway. There's going to be lots of stuff. Some of them are going to be on this week, in fact. So glad to have you guys here. Stay tuned. Be watching for that, because you know what, man? You're going to get good content right here. And you know what? It's free. It's free content. Now, we've got a lot of good stuff for you in the Tradeway program. But what do I always say on here, Jeffrey? I see you. I'm coming on here every week on a Monday, on a Thursday. I want to give you something practical, something useful, talk about something that's going on to help you win at your finances. Of course, at Tradeway, what we do is we look at trading the U.S. stock market. We teach people how to trade stocks and options. We focus primarily on stocks right here on this channel. But I also mentioned that I would be moving. Pretty sure I told you guys this a few times. I'd be moving out of the great state of California back to the great state of Texas. Everything's bigger in Texas, and our plans for this year are bigger. And we are here in Texas, getting settled in to the new studio here. So we'll see some more changes coming in the future, but we're getting settled in. So I'm glad to be coming at you guys tonight, Central Time. Troy, I see you there. Jeffrey, I see you there. Ruben, I see you there. Says, good evening, Blair, and everybody else here from Ashburn, Virginia. We're coast to coast on this broadcast every single week. And just like everybody I just mentioned, if you're joining us tonight and you want to drop your name in the comments, let me know who you are, where you're from. It's not just a token thing. Listen, I want to know who you are. The program will show me how many people on here, but I don't know who you are, and I'd love to know who you are. And it helps me when you ask questions as we go through some material tonight. Then I know your name, and you can go ahead and send those questions in to me, and I'll keep those up in front of me. Jeff, I see you there. He says, welcome back to Texas. It's good to be back. I got to say, it's good to be back. I do love California, but you know what? It's I won't go into all the specifics tonight on some of the things that are just particularly challenging about the state of California right now. But a beautiful place. Love everybody there. Hello to everybody out there on the West Coast. And like I said, coast to coast. So thank you so much for that. Jeff from Fredericksburg. Judy, I see you there. Maryland, nice, excellent. Troy, I see you there. Doak Stewart, forgive me if I'm saying that first name wrong. San Antonio, Texas. Good to see you too, man. All right. Well, hey, listen, this is Market Monday. So what are we going to do on Market Mondays? For those of you who don't know, of course, a lot of you guys know, but for those of you who don't know, we're going to take some time. On Mondays, we're doing a show where we're going to look specifically at something about the market that's more practical in a lot of ways. It's more practical for you, for me, to give you an opportunity to learn some things about the market. We're going to look, hey, what's going on right now? But I want to look at something practical for you to do. So today we're looking at, hey, too little, too late. Did I miss it? Did I miss the market? Now, we talked about this from a certain angle a few weeks ago. I want to say a few more things to you tonight about, did you miss it and what could you do now? So I want to talk about that. You'll notice I got my whiteboard behind me here today as well. So one of the things I want to do a little bit more this year is just give you some practical teaching as you go and do this. Don't just want to give you concepts, but want to give you application, right? Not just information, but application. And that is certainly something we are all about here at Tradeway. So I want to give you a trading tip before we say goodbye tonight, and remind you that, of course, we will do another show on Thursday Stock Talk, hot or not. Stock Talk, hot or not. Last week had hundreds of people on the episode wanting to know about GameStop. This week, we're going to talk about something similar. What's up next? What's up next for the Wall Street bets? But that is something we'll come back to. There's a kind of a new angle on that playing out right now. We'll see how that goes this week. We'll talk about that on Thursday. Tonight, specifically, like I said, too little, too late. How many of you guys out there are asking yourselves that question, or maybe you're wondering? Now, let me just go ahead and do this for you right here. I'm going to share my chart so you can see this, and let's just review this. A couple of things. This is how the market has been. I mean, let's just look at that, okay? April, 2,500. January, almost 4,000. This has been a very, very, very strong recovery in the market. A lot of opportunity for us who are buying stocks when we are looking at a market like this, okay? I'm not saying that we would have had to guess everything or we would have just bought at any time. No, we have more of a plan and a system for entering and exiting at the right times, at the advantageous times. You've heard me say this on here before. We never know what's going to happen, right? Anybody who tells you, you watch any other information, read any books, anything, anyone who tells you, I have a system and I know what's going to happen. First of all, I question the legalities of that statement, but most importantly for you, it's just not true. There's no way anyone can know what the market is going to do, but they can know where the advantages lie. That's the system. That said, looking at this chart, hey, listen, what do you want a stock to do? Well, you want to buy low and sell high. I mean, that's the most basic explanation of what we would hope to do and see and have happen if we're going to purchase stocks. Buy low, sell high. Remember, we're talking about trading stocks here, not just investing. Now, I'm not excluding investing, but we have to understand that there's a little bit different approach between trading and investing. You look at this chart here, and it is moving up, up, up. It's fairly, what we like to say, reliable, predictable, repeatable. Those are the kinds of things we want to find. So what is my point here? Well, remember, we're talking, hey, did I miss it? Well, did I miss what? Well, hey, that's exactly what we're looking at. Look at this. Okay, some of you will remember we looked at this a little while ago. We had this great big drop, huge drop. Now, for some of our students who have the skill sets to be able to trade in that, okay, we're not talking about shorting stocks. We mentioned a little bit about shorting last Thursday's show where we looked at GameStop. Now, we're not talking here about shorting stocks. We don't actually teach shorting stocks, very risky strategy. But there are some option strategies that help you get into a position where you could potentially make money on a position when the stock is moving down. And in this case, that could have been a tremendous opportunity. Also, a time that we were helping some of our students understand, hey, here's how you can limit some of your risk. Here's how you can stop some of the risk from eroding, say, your retirement account. Okay? I know a lot of you out there, that might be something you're thinking about, something you're concerned about. That's certainly conversations that came up during this time. But the main point here is you had this great big drop. Stocks went way, way, way down. And then we started saying, well, hey, is there an opportunity in here? Or if a recovery begins, is there an opportunity for this recovery as it matures for me, for you, and I to be trading stocks? And of course, the answer, as I mentioned already, is yes. There was lots of opportunity in here. Now, look at this where I've got my line on the screen here, okay? That goes back to the high before the COVID-19 shutdown. And if you remember, it was also oil and energy bottomed out. So there was kind of two catalysts at the same time. But of course, the primary one that really kept it going was the shutdowns. You look at the market here, over that time period, very strong movement. We had some corrections, we had some moves down, but very strong movement. Well, look at this here. We're at about 3,400, not quite, but about 3,400 at that peak. It drops, and then it actually is able to recover up to this line here in a very short amount of time. And then you've actually got the stock moving above that line, and it's continued to move above that line. Even though, would you say that the economy is better now or is as good now as it was when it first dropped? Well, I would say that's a definite no, but stocks have just continued to increase. So what does that tell us? Well, it tells us that ultimately this has been a very, very strong recovery in stocks. So is it over? Because if I'm going to say, hey, is it too little, too late? Is it too late? I gave you some reasons a couple of weeks ago of why now is a good time to start. Well, there's certainly some overlap here, okay? Is it too late for me to start trading stocks? Well, I can tell you what. Let's look at what a bull and a bear market are, okay? A bear market is when the market drops from the high 20% or more. Okay, that's when the market drops. That's what we saw in March, okay? But shortly thereafter, it began a recovery. Now, normally we don't see a recovery quite this, I'm going to say, dramatic. But even in past history, if we were to go on my chart here into the past and look at other bear markets, which is when the market resets. So if I'm looking to get into the market and I think, you know what, I don't know if a bear market is going to come, I don't think it's a good time for me to be in. Well, you have to consider that even if that happened, which if we wanted to get into the market as a buyer, right, buying stocks, that would sort of be worst case scenario. You'd have to keep in mind that even in past times when things were a little more, I'm not going to say normal, but obviously this COVID scenario is very unique and the recovery has been unique. You see those bear markets, they really don't last very long as a whole, okay? So even when the market tanks, this is the takeaway, even when the market tanks, even when the market drops, there's always opportunities coming. And that would be the first thing that I would say. Did I miss the market? You always have to know, no matter what's happening in the market, I don't have a crystal ball. I don't guess. I have a system that helps me identify when there's an opportunity and when there is not an opportunity. And if I have that, then it doesn't matter what the season is. I can look at the market and go, there's an opportunity present. And if there isn't, I know how to watch for another one to come up because they always come up again. Now, if no opportunities happen again tomorrow, I can promise you that's the first time that I've ever seen that happen. That's the first time our founder and CEO, David Mitchell, will ever have seen, hey, there's no more opportunities in the stock market, right? I'm not saying it's always a good time to trade. Remember, I said I can identify when it's a good time and when it's not. It's part of my skill set. But I want you to know that if it's not present today, it's just a matter of time. There's other opportunities coming. So did I miss the market? Well, let's be honest. If we didn't trade over the course of this year, if we did nothing, was there an opportunity here? Sure there was. Did we miss it? Maybe. I mean, that's just honest, right? Maybe we did miss it. We don't have to beat ourselves up over it. We don't have to crawl under a rock, right? But yeah, maybe we did miss an opportunity. So my question then would be, if I did and say, well, man, I think it's too late now. Well, then we're just setting ourselves up to potentially miss yet another opportunity. And this goes back to the overlap I mentioned where ultimately, is it a good time to start? Hey, listen, the market is more available to you and I than it's ever been. We looked at GameStop last week. Well, one of the big catalysts for that whole scenario is the fact that trading is more accessible to you and I. It's more accessible in terms of information, technology, and cost than it's ever been. So getting started, learning, moving forward from wherever you are, there's never been a better time for you and I to do that. And since we don't know what's coming, and the opportunities here are tremendous, then we don't want to let that narrative come in too much. Did I miss the market? Now, let me say this, because some of you might be thinking this. Well, Blair, okay, I get what you're saying. Maybe there's going to be some more opportunities. And so I'm going to look at getting some skill sets into my life so I don't miss those, so I can learn to identify when they are present and when they're not. But don't you think the market's going to crash soon because it's been going up so much? Let me say a couple of things to that. Number one, I don't guess when the market is crashing, okay? There are warning signs, but I don't guess when the market is going to crash. Because you know what I've seen happen, even from when I was, I say, a young trader, my early trading days, that apprehension, and maybe you could even say anxiety for me. Maybe it feels a little different for you, but anxiety for me in the beginning of, well, what if the market does a big downturn right after I start getting in? Well, here's what it did. First of all, fear usually produces what it tries to avoid. So instead of getting in and missing out, I just stayed out. And you know what that did? It was opportunity cost. I ended up missing out on great opportunities. And in that sense, there was a loss, which is exactly what I was trying to avoid in the first place. But I also found that as I kept the narrative in my head, ooh, it's going to fall, it's going to go down, it's going to, filling in the blanks for the market instead of letting the market fill in the blanks for me, what I ended up doing was missing even more because I was guessing. Instead of going, oh, I'm learning a skill set that gives me the confidence to know when and when not to. But I hadn't got far enough yet to really understand that. So I'm giving you that today to say, is it going to crash? Well, first of all, we are looking at a few things on our Tradeway pages all the time. Example, we've got massive stimulus packages on the table. Some have already passed, more are on the table. And with interest rates very low, with stimulus packages coming out, we can even look at the economy and go, you know what, the economy is not doing that well. And yet the stock market keeps going up. Why? Because it likes cheap, easy money. And that's what's happening right now. It's just getting money pumped into it. And as long as that happens, we could continue to see these conditions go up. Now, is there a risk to that because the economy doesn't seem to be doing that well? At least not compared to where we were? Yes, there are some risks about that. So that's why we help you understand. This is a good time. This is not a good time. This is a good stock to trade. This is not a good stock to trade. That's something we help you do. But guessing and wondering if the market's just going to fall off a cliff is never helpful, because stock trading is actually not about knowing what's going to happen. Some of you are note takers. I would say write this down. Stock trading is not about knowing what's going to happen. It's about managing risk. So if you're feeling frozen, I hope that's starting to free you up, because ultimately you got to know that the skill set can help you feel confident regardless of what the future holds. And let me just remind you something I said just a moment ago. Remember, I said we were looking at this. I had conversations with students. Now, I can't give you testimonies from students, okay? That's not something I can do. But I can tell you that I had some conversations with students in this scenario. You see this large, quick. I mean, really, what was happening here was the fact that it was so fast. I mean, it was definitely deep, but it was fast as well. And people were in retirement accounts, right? 401ks, all kinds of accounts that were preparing for the future. And people were able to say, I have a skill set to help me navigate this time in both my trading and in my we call long-term money. In most cases, we mean retirement accounts at that point. Able to navigate that with more confidence, not because they knew what was going to happen, but because they knew what they could do about it. And that is ultimately the mission we have at Tradeway. So again, I'll say the last time, I know I've said this multiple times, I want to drive this point home, making sure that we know that the market is going to do what it's going to do. And we can manage risk and identify times that are more or less risky. Comes back to the skill set that we teach. But there is an opportunity. There's always another opportunity coming. And if we need to even sit out for a while, we still want to be ready when the next opportunity comes. Now, that's the first thing. There's always new opportunities. But from there, you got to understand something else too. I want to make sure I'm not missing any comments here. Jeffrey says, Blair will be using a whiteboard today. I will be, Jeffrey, and I'm thrilled about it, I got to say. I want to get not too far off the point. Number two, listen, you can always add to your skill sets. You can always add to your skill sets. Simply look at this. What if the market does crash? What if it doesn't? What if it does this? That's what we call a correction. Okay, a correction is the high, okay, the high that it made, and it's a fall from the high, but it's 10% or more. It's not 20. 20 is a bear market. It's 10%. Anything less than 10 is a retracement. So retracements are smaller, corrections are bigger, bear markets are the biggest, okay? Bear markets don't come very often. Corrections, we could say generally, at least historically, it doesn't always follow this, 3 to 4 months or so of trading, and we're going to see some kind of a correction. I would say the last year has been unprecedented in every way. So don't hold it to that exact model. Hey, every 3 to 4 months, we have to see a correction. But understanding that the risk of that happening as time goes on, it is higher because stocks do like to reset. So we get corrections. So what's my point? Well, whether we see a retracement or we see a correction or we see a bear market, right? All things that most people fear. Think about that for a minute. Financially, most people in our culture fear all of those things I just mentioned. Now, they maybe don't even know those names, right? They just know when the market goes down, it's not good for it says something bad about the economy. When the market goes down, it's saying my 401k is going down, right? Now, I'm not saying I want the market to go down. I'm not saying I like when the market goes down. But what I am saying is if we can expand our skill sets, we can learn that this, as I mentioned earlier, is a tremendous opportunity because, example, just one example. If we were to add something to our tool belt, our skill set, we call put options. We're learning to trade options. You say, Blair, I don't know what an option is. Okay, that's fine. Today, we don't need to know what an option is, but I can tell you that if you buy a put option, let's just say theoretically, you bought a put option in the S&P 500, which is what we're looking at here, that put option would increase in value as the market dropped. Now, this is always a brain twister for a lot of people. Wait a second. How can I make money on something when the market goes down? For today, just understand that they work inverse. They work opposite. There's something you can buy that actually means when the stock goes down, the thing you bought, in this case, the put option, it goes up. Now, we've talked about this on this channel before, but I want to remind you today in the context of when, if, maybe the market drops, okay, no matter how much, correction, retracement, bear market, you can use another tool in your tool belt, potentially like put options, in order to be in the driver's seat. Now, that's just looking at adding a skill set. Again, most people approach that with fear. So I want to say two things to finish out point number 2, which is you can add to your skill set. Too little, too late. Did I miss it? Maybe you can add something to your tool belt and say, did I miss it? I'm not necessarily looking forward to the market dropping, but I've got skill sets that I can use in either situation, so I'm not afraid of it either. Okay? So that's number 1. I don't need to be afraid of it. And number 2, I can actually feel like I could be confident in it because I can take advantage, or at the very least, recognize when the edge is present and when it is not present, which gives me confidence as I am trading. Let me jump over here, look at some of the comments here because you guys are lighting up the board, and I like it. I like it. Let me go ahead and remove that for a second here. Oh, let's see what we got here. Jeff is saying they are pumping crypto. All right, we'll take a look at that here in a second. I don't mind just jumping over, taking a look at that real quick. Mario from San Antonio. We got a couple from San Antonio here today. Jeffrey says, a Texan with a whiteboard makes me think of Karl Rove. Now, somebody out there is going to be upset with me. I don't know who that is. So somebody can drop in the comments and tell me who that is. You might be just upset with me. Are we maybe looking at a small mini crash? Who knows? Well, hey, small mini crash, what might that be? Well, maybe a correction. And the answer is we could. I don't guess. So here, let me pull up the chart again. Let's pop this back on here. I'm going to put this up here. There we go. Are we maybe looking at a small mini crash? Who knows, right? Well, he's right? Who knows? But look what just happened this past week. Obviously, we had all this craziness, GameStop, all that kind of stuff. And we had a couple of really negative days, right? It hit resistance, which we expect what at resistance? Well, if you've been following along on here, like I said, hey, listen, we're teaching you some of these things for free, okay? And these are significant items for us to learn. They're significant topics. For example, like what does the stock do when it hits resistance? And what is resistance? Well, when it hits resistance, it's meeting what? Resistance. So it tends to drop. And that's exactly what happened. And it broke through support, tried to recover, couldn't do it, failed again. And with the Lord as my witness, I said to somebody who's not a Tradeway student yesterday, I just moved back to Texas, was talking to somebody I hadn't seen in some time, said, we don't know what's going to happen on Monday, but I can tell you what, the market's at the 50-day moving average. It's not a magic line, but it often provides a pivot for stocks. Remember, we're looking at the S&P 500. And so a strong follow through this morning, I told our students, they're in one of my programs, one of our programs on the community pages, which is an access point for students come on every day. They're able to interact with the coaches on topics. We post charts, trades, all kinds of stuff on there. And I said we shouldn't be surprised that we got a pretty decent move up today because we pivoted off that 50-day moving average. What's my point? Well, let's go back to the question. Are we going to get a mini crash? Well, we don't know. I mean, would you call what we just had a mini crash? It was a retracement, but it was actually more than a retracement because it broke through support, went down to the 50-day, and here we're bouncing. Now, we don't know if that's going to continue tomorrow. That goes right back to what I said. We're not guessing. But we did get that drop. So we can expect that these drops happen. And I would even say, lastly on that, as it comes to mind, up in here, I had students asking me, Blair, should I be trading up here or not? You know, we're having this bigger conversation about, is it okay for me to begin trading in the market as a whole? But for students who are already trading, there's a conversation, that's sort of the macro conversation. On the micro, they're saying, hey, this week, should I be trading because the market's near resistance, like up in here, okay? And we have some specific tips for them to say, hey, excuse me, here is how you could continue to engage the market, but you could cover your downside, is the way I'd say it. You could manage the risk. You could do some things that will actually help you continue to keep trading, which is a little more risky if we're at resistance, but you'll reduce your risk. And there's a couple of different ways that we can do that. So those are really important lessons to learn. That's a great question. Let me keep going here. Is it possible to get the names of those 5 stocks spoken about? I'm trying to remember now in my mind when I mentioned 5 stocks. If somebody out there knows exactly what I referred to, I don't remember saying something about 5 stocks today. We did talk last week about specific stocks on our Stock Talk Hot or Not. We talked about GameStop. Last week. couple other stocks as well. The whole Wall Street Bets thing. There's more than just GameStop on there, of course, but that was definitely part of it. James says, let the gorilla lead over at Tradeway. We like to call the market the gorilla. Ultimately, here's the principle. When you're dancing with a gorilla, who should lead, right? If you try to lead, you might not have any arms left by the time the song is over. And that's how we like to approach the market too. We let it tell us what it's going to do. Right. That's good. I got you, Jeffrey. Yes. Okay. Troy says a lot of noise out there. AMC as well. Yes, that's right. AMC was one of them. BlackBerry was one of them. And then obviously we looked at GameStop. Yeah, there's noise in the market. Troy's saying noise in the market in the sense that there's just a lot happening. Well, on some level, definitely last week was noisy. If you would say that there are quiet times and loud times, certainly the volatility last week because the market was dropping, because we saw this crazy conversation with GameStop, we definitely saw a noisy market. So no question. Now, I did mention that I would go over here. This is a little bit beyond what we were going to do today. But I want to just say this really quick, and then we'll kind of get back to our main topic and wrap up. Oh, that's not the one I want. We did do an episode a little while ago on Bitcoin. So just to remind everybody, I'm going to go ahead and just delete all these lines. We don't actually trade crypto here at Tradeway. Okay, we don't make a recommendation on this. What I wanted you to understand out of that broadcast is the unique risks. Certainly, there are some. These prices have appreciated pretty significantly. Oops, that's not what I want. So, is there an opportunity? Well, potentially. But I tend to shy away from things where, it might lose 60% of its value in a very short amount of time. Okay, so that said, here's the Bitcoin chart. So kind of just been going flat for a while here. Just been going flat. If I can go back up and pull up your original question here. If anybody else has questions too, go ahead and throw those in there. Yeah, Jeff just said they're pumping crypto. I mean, crypto's had a pretty big run up, but it's kind of flat, just going sideways for now. So nothing much there today to comment on for me. So, hey, listen, too little, too late. That's the topic. Too little, too late. I would say never too little, never too late. I tell people all the time, it's not about quantity when you're learning to trade. For me, it's about consistency. Listen, you can't give what you can't give, but choices change. New choices, new changes. If you want to do something new in your finances, start to do something new. Don't let the big stop you from engaging with the small, because if you're consistent, you can move forward. We want to help you do that. That's who we are. That's why we're here. That's what we do, is help people leverage their time. You can learn from me. You can learn from David. You can learn from the coaches at Tradeway a whole lot faster than you might learn on your own. Not to mention, you're going to pay for education one way or the other. You can give it to the market, or you can learn how to manage your risk well. Okay. So I just want to say that. And number 3, remember I said, there's always new opportunities. 2, you can add new skill sets, which only broadens opportunities. Or you can say, you know what? I'm going to sit out. And you can sit out. In fact, there are traders with skill sets, and that's exactly what they're going to decide to do at certain points. They're going to sit out because they don't see what they need to see. Too much risk. But the difference is they're saying, it's because I don't see the opportunity I want to see right now, right? Don't allow fear to take away another year of possible potential opportunities for you. I've mentioned on this channel in the last, 3 weeks now, because we're into a new year, even my own trading is something that I'm saying, I'm going to another level this year, okay? I'm not coasting. I just said to a student on the phone about 2 hours ago, there's certain things about learning to trade where it's like an airplane. You're going to use more fuel, more energy getting up to cruising altitude. But once you get to cruising altitude, you can't let off the gas entirely, but it's different. It's a different ball game. But hey, listen, there's higher heights. We want to help you get there. So you can sit out, you can miss more, you can allow fear if that's the case. Listen, I've done it. That's something we want to overcome. That's something we can overcome. It's not about quantity so much. It's about consistency. It's about consistency and leverage. Okay, so Yolanda, I see you there. I also said we're going to have a tip tonight. Tip. Now, I've told my students, Jeffrey's on here. He knows this. He's heard this. A bunch of you guys who know me from inside the program. You've heard this a bunch of times, and it's this. Stock trading includes, if you want to follow me on this metaphor, okay, it's a driver, it's a car, and it's road conditions. We want to drive when the road conditions are good. When they're not good, we want to slow down. When they're great, we can speed up. That's something that we want to learn to do. Next to that, we want to have a car, a good car. Not all cars are created equal, right? Some have better safety. Some have better handling. Some have better braking. Some have better acceleration. Some have better durability. That's our trading system. Okay, the trading system can help us get where we're going, as Myron Golden likes to say, further, faster, with less work. That's the idea. But the driver of the car is the most important part. Listen, car's not going to go anywhere if it's got no wheels. And if there's ice all over the road and you can't see anything, probably not a good day to drive. But no matter what the conditions are, no matter what the car is, if there's no driver, there's no action. Nothing's happening. And in trading, a lot of times we learn to focus on the road conditions. We focus on the car. In fact, I would say 99% of programs are going to focus on the car. Here's the car you need. Go buy this stock. Here's what you should do. Here it is. System. Here. It's not bad. System is good. We teach a system. I use a system. But a system is not incorrect if it's effective, but it's incomplete because we need to understand road conditions. We looked at a little bit of that today. In fact, a lot of our conversation today is a doorway into road conditions, market conditions, something at Tradeway we call market tone. But what am I getting at? We're getting at driver. And that's our market tip today. I want to show you something about the driver, practically speaking. Okay, let me go over here. Let's just say we have a stock. I'm going to make it really simple. I'm going to turn this a little bit so y'all can see a little better. And you're looking at a pattern that's been doing this. I'm going to make it, like I said, real easy. Okay? Got your trading lines there. It's moving back and forth. This is, say, $10, and this is $20. Okay? It's moving back and forth. I want to show you something really quick. Let's say you notice the stock here. Okay? And you're saying, I'm going to plan to potentially purchase that stock once it what? Gets back down to this level. Okay? But you got busy. You got busy one day. You didn't hear the alarm. You didn't set an alarm. You're not really sure what I mean by alarm even maybe. Okay? And you missed it. Remember, $10. Put it on this side. Okay? And it gets up to here. Let's say in a single day. Makes a huge move. Now, I'm just using easy numbers here. But it gets up. Maybe you missed it for a day. Maybe you missed it for 2 days. But you weren't there when it was at support. And you went, oh, no. I let it get away. I wanted to get in this trade. I've missed so many trades. You know what I'm going to do? I'm going to get in anyway. I'm going to get in anyway. I'm going to go ahead. I'm going to buy it. Maybe it's not at 15. Maybe it's at 14. And you said, no, 12 is as high as I'll go. But you went in and you got it at 13. Now 13 increases the amount of risk you were going to have on here. If you said 11, 10 to 11 is the highest I would do it. That's $1. You've gone $2 higher. And this whole window has now gotten bigger, right? That whole window of risk has now gotten bigger. So if you end up going to your target, you're going to make less. And if it drops, which happens, it may drop back down to support. We've covered support and resistance on this channel before. You can go to any previous broadcast, go all the way back through the catalog. If you're joining us for the first time today, you can watch all of these broadcasts, Facebook, YouTube, wherever you're joining us. Stocks tend to stop at and pivot at support. So if I buy too far away from support, it might fall back down to support. But when it falls to support, ideally what I want is the stock to be close to my buy point, right? And if I buy really high up, I'm already in the hole by the time it gets back to support. Now, if it breaks it, I'm really in trouble, but I'm already further down if I chase that buy point. Now, we're not going to go into stop outs today, but this severely complicates the stop out process, your ability to manage the risk. Emotionally, I talked about the car, talked about the road conditions, talked about the driver. The driver, you are the only one who has the ability to control yourself and say, you know what? If I miss it, I miss it. And that's the tip for today. I'm telling you what, I'm speaking to somebody out there. If you're trading and you miss it, tell yourself, I missed it. I missed it. And by limiting yourself from chasing something, you can build good habits for the future. Now, I'll say this one last thing, because somebody out there is saying, well, Blair, that thing could go up to 20 and I'd have missed a great trade. You might be able to get into a trade late and still see it go to target. And you would probably try to make the argument with me that that was worth doing. And I would agree with you that potentially you made money on that. But I would also say you, and I've done this before, keep that in mind, you've now built a habit that increases your risk significantly and erodes some of the self-control and self-confidence about that control that is necessary for a trader to be consistent. Everybody can go out, and I'm going to close with this today, guys. And this is true. This is true. Everybody can go out and put on a winning trade. Listen, sometimes we could even, not to say that people out there are doing this, you could throw mud at a wall. And sometimes in the stock market, the stock's going to go up. But that's not really what we're here to do, is it? We're not just here to go, oh, I got lucky. Awesome. I mean, I say this all the time. Trading is never guessing, gambling, or going for it. It's never guessing. It's never gambling. It's never going for it. Gambling is just going, well, here we go, right? Trading is about being consistent over time. Consistent over time means good habits. Good habits mean self-control. Bad habits, chasing buy points. Tip of the day, we don't chase buy points at Tradeway. Everybody can raise their right hand now and say, I will not chase buy points. And I'll say the same thing. Troy says, good lesson to learn. Hopefully don't have to learn as an experience. You don't. That's the beauty of it. You don't. So that said, everybody, this has been our Market Monday broadcast. Somehow, some way, we always end up at 45 minutes. And you guys hear me say that? I don't know how it happens. It just happens. It just works. Glad to have you guys on here. Every single time you're on here, everybody who commented, hey, you took time out of your day and you joined us. Run the Race, Mark. I see you there. Mark Derby, listening today from Kentucky. You're the first one I've had on here, at least that commented from Kentucky. So good to see you there. Idris Ahmad, I see you from Washington, D.C. Jeffrey says, I will not chase buy points. Good. Me too. That's something that we all have to watch closely. Okay. Now, I mentioned on Thursday, we'll be back. We'll be doing Stock Talk. We're going to look specifically at some more Wall Street bets. What's this whole Wall Street bets thing? We looked at GameStop last week. They've actually set their sights on something new. So we're going to look at that this week. We want to let you guys know I'm going to put a link in here when we're done. Once we get off the broadcast, you'll notice it, whether you're on YouTube or you're on Facebook. I'm going to pop a link in there, and you're going to see that link that's going to give you an opportunity to register for something that I am going to be doing with one of our other coaches, Mr. Jeffrey Nance. You're going to have access to this in our program, the last hour of the trading day. If you're on Central Time, that's going to be 2 p.m. to 3 p.m. Monday through Friday. This is going to be on our Zoom platform where you can actually join us for a live trading broadcast. Okay, that's something that we do in our trader program. Okay, we call it Trader Pro, and you get to come on there with us, look at patterns in a live market environment. We give our insights, assess the risk. Remember, I said we can identify when edge is present or when it's not. That's what we're going to spend time doing. You guys get to be invited to do that. And we want to give you some access to that. So, hey, I can stand on here all day and I can say, hey, we've got all this great stuff that's really going to help you do what? Feel confident. That's what I want. But if you don't ever see it, sometimes it's hard to go, well, what's he really talking about? Well, we're going to give you an opportunity to do that. We're going to do ultimately what's going to be a master class, if you will. And so we will get that posted up there for you. If you guys need anything else, of course, you can always comment, ask your questions, email us at Tradeway. Go over to tradeway.com and you'll find all the information you need over there. And if you need anything else, there is also contact information there. You can reach out. But of course, you can always comment right here on YouTube, Facebook, and I will be back on Thursday. Thank you so much for being on here, guys. Thank you for taking the time, and we'll see you next time.